Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern. U.S. It's Wednesday, the 1st of March, 2017, a new month, new beginning. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Market stance today is bullish. We're looking at the Euro Stocks and the DAX again leading. The Euro Stocks up 60 points, 1.81%, followed by the DAX up 1.5%, 178 points, and then the mini Russell. The Dow Jones follows that. The laggard today is the yen, the treasury bond, and gold. The security instruments or the safety instruments are down. The yen is down 1.53%. The dollar is strong today. Gold down 1.29%, trading at $1,237.70 on April futures. Crude oil is up 0.5%. It's trading at 54.32, right back up against a key area, the high volume node in this area. It's a market that is definitely bullish in its stance this morning. As far as the news flow, overnight, I'm sure all of you heard about the address to Congress, to a joint session of Congress here in the U.S. by President Trump yesterday, laying out his vision for America First. I guess it received a very good, there was very good reception of his comments. The Fed rate hike odds surged this morning. The market sees an 80% chance the Fed will raise its benchmark interest rate 25 basis points in the March meeting. That's important, as the odds of a surge in rates increases, so will the U.S. dollar, and so we're seeing a pounding of the Japanese yen this morning, as well as the euro. Other than that, there really isn't all that much I'd like to report. This morning we got some numbers out of Europe as well as the U.S. This morning's numbers in the U.S. about a half hour ago. We got January PCE core 0.3% in line. Personal income came in at stronger at 0.4 versus 0.3. Personal spending weaker at 0.2 versus 0.3. The deflator month on month in the U.S. for January is 0.4 versus 0.5%. Looking at what we're expecting today for the rest of the day, at 9:45 Eastern, we're looking for U.S. manufacturing PMI final for February. 54.5 is expected. The Bank of Canada rate decision comes out at 10 o'clock. Expecting 0.5% in line with prior months. Also at 10 o'clock, we get construction spending month on month for January, expecting 0.6. 10 o'clock, also ISM manufacturing 56.2. And then we get crude oil inventories at 10:30, expecting plus 3 million barrels. Distillate inventories expecting a deficit of 1 million barrels, and gasoline inventories expecting a deficit of 1.5 million barrels. And then as far as speakers, Fed Speaker Kaplan is expected to talk at 1 o'clock in Dallas. And then we get U.S. Federal Reserve beige book at 2 o'clock. That has been a mover in the last few months. And then at 6 p.m. Eastern this evening, we get Fed Speaker Brainard, which is actually in the Thursday session, trading session. Let's look at what we expected yesterday versus what we got. Let me preface this real quick. Now, these trader bites have been kind of blah because there's nothing going on other than buy the dip, right? So it's hard to come in here day in day out and try to give glimpses of something new when there's nothing new happening in the market. I mean, I could turn these trader bites into a statistics homework type of environment, but that's not what we're here for. And I certainly don't want people to rely on my statistics alone. Everyone should be doing and relying on their own. So These trader bites might seem really kind of boring. At least they seem so to me because there really isn't much to say when day in, day out, the market's either holding near highs or pushing highs. There's no rotation to the downside, so we're not getting rediscovery, we're not getting retesting, we're not getting a proper uh, uh, inter-day auction, meaning from day to day to day. We're seeing some pretty decent moves intraday, but not much in the way of things happening between day in day out because there really isn't much happening. The market is just holding near highs. It's an investor's market. Yet I'm doing these trader bites every day, of course, to just keep the community together and to keep us all talking and kind of looking at the markets together. And that's the key here. I'm not here to help you with your trading in a material way. I'm here to give you a glimpse as to one and only one potential way you can prepare for the market on a daily basis and get your mind and get your head in the game. And that's really what this is all about. So I don't want this to be misconstrued as me helping traders or failing to help traders or something like that. In order to help you, I have to involve you in a much more focused way. That means a concentrated kind of environment in the form of a course or something else. And I'm not in a position to do that at the moment. So what I'm doing is offering up what I see the market as and what's happening on a day-to-day basis. There's not much I can do here to make this more educational, so to speak, if the market is not able to provide real-time rotations, proper rotations to see um, what the actual auction is attempting to do. So as I go through these hypotheses, I sit here and go, gosh, these are it's just hypo 1, 2, 3, maybe 1, 2, one doesn't work. It looks like it's going to work, then it doesn't. Then we go to 3. Then how does that impact my trading? That sort of thing as somebody listening in. But here's the thing. You're not walking away with a plan for what you should do. You're walking away with a plan for what I think the market is likely to do and how I'm going to respond to it. The responding to it part involves a lot of detail in order flow analysis combined with probabilities, and that's how I trade. It's not fake. It's not nonsense. Those who have done the homework and have deliberately implemented this are more likely to see results, in my opinion, and some have. But it's important for you to take this information and say, okay, this could be a foundation for how I approach the market, how I approach my homework. That combined with the webinars that I've done for Futures IO and others um, should give you a good basis for putting it all together. And that's the goal of these trader bites. So I'm not here to offer you a plan. I'm here to offer you an insight on one way to do this. There are a billion ways to trade the markets. There's no right or wrong way. Just remember that, okay? So I'm just saying that just to make sure that everybody's on the same page. I kind of issue that reminder once every few weeks just to make sure just to make sure that everybody understands what the purpose of this is. This is Hypo 1 yesterday. Hypo 1 was expected to be where we were opening underneath the prior day's close and the point of control. We were opening up right up against the overnight low. The expectation yesterday was to open around the 65, 60, 65, 75, 66 area. Given the stance in the overnight, the expectation was for it to open sideways, then break lower, take out the overnight low, find its buyers, and rotate back up to 2368.75, and then push new highs slightly. Because of the range, the expectation is that it wasn't likely to push through by far if it does take out the high. That plan did not work at all. So that was a no-go, and we could see that it was a no-go early on in the session. The plan that looked like it was working was hypo 2 early, until about this point here. Hypo 2 with an open auction starts to move up with an upward skew in a sideways in an open auction, and it looked like it was starting to migrate towards 2368.75, at which point I would be looking for a test of 68.75, a pullback, and I would look to lean against size on the order flow on the bid, and the opening swing or mid or something else. Order flow alone doesn't do it. Um, and then look for the long to push into new highs. Of course, that didn't work either, as you all know. Hypo 3, however, was the plan that was in action. The market started to skew up, and then we had a large rotation down, this rotation down, and then the expectation was what we would push to 60.50, and I talked about the extended target being 2357.75. That's a 2357.75. This is the naked point of control from a couple days ago. So Hypo 3 was the one that worked, and I'll show you how. Here it is. Hypo 3, a little move up, skew up. Remember, this gives us an idea that it could be Hypo 2, it could be Hypo 3. But then once we got the initial move down, actually, this is better shown in my trigger chart because you can see the rotations in there. So we had this skew up, and then we had this move lower. This was definitely an impulsive move down, 9.5 points lower from the high, the most recent high at 67 even. And then it rotates back to mid. We had a long discussion about this in the S5 chat room about the potential for a mid here, and I talked about the probability of it pushing to 63.50, the 63.50 area, and then 65 above 65 would be wrong on the short, and then look for the rotation back to 60, and it got to or 60.50 and it got to 59.75. So here it tagged at 57.75. Pushed back through. This was an impulsive move down, so we expect a continuation unless it takes out the mid. And then if it does, if you do take the short, then you're looking for a short-term target, which would be the zipper cluster along with the MC point of control at 60.50. It did fill through 60.50 and went to 59.75 by 3 ticks. Attempted to push through again, and then ended up selling off a little more down to 59 before the rally into the close. Of course, this morning we're much higher after following the speech by Trump last night. We're trading at 23.81, right against the highs. So this is where Hypo 3, as shown, ended right there. And then everything else was basically a two-way auction, a day trader's kind of paradise for a little bit. Why do I say it's a day trader's paradise? Because you had some pretty good rotations. It wasn't 2.5 point rotations. There were some pretty good rotations in there that allowed for a little bit of play on both sides. So that was pretty decent there. The overall profile that we left behind is fairly sharp. It's not quite Gaussian. It was almost like a kind of a double distribution. It was a weird trade. There's a small kind of level right in here. As you can see, there's this support that got broken that became resistance. And how does that translate for us? In looking at volume profile, it shows up as an LVN. That's the power of LVNs. Don't take an LVN for what it is. An LVN is a low volume node. If I stretch this out a little bit, you'll see it right here. It's a point where trading was less than the areas around it. And generally, this creates a support resistance area. I cover this in depth in webinar 2 of my website. But when you see an LVN, you have to look back and see how it's formed. What is the context of it? Not all LVNs are born alike. It's not black or white. It's shades of gray, right? So that's what we had yesterday. That's a summary of what we had yesterday. What carried over into the overnight was What carried over into the overnight is a pretty active session. We have heavy volume in the overnight session, 337. That's outside of two standard deviations um, of volume from the 4:30 p.m. Eastern till now session, which is considered part of today's session. It's pretty heavy. The profile has multiple distributions, as you can see. It's just there's no consensus on price last night. Strong uproaring kind of move, as I had warned on Monday and pretty much for the last I don't know how many weeks. If you are short, make it quick or hedge. So swing shorts are definitely at risk here. You're picking tops, and it's a definitely a difficult thing to hold on through. So this morning we're pushing up against highs. We had an impulsive move, consolidation. There's a nice little consolidation zone here, a flag, and then it's breaking out again and it's forming yet another consolidation. This looks very bullish to me. So it changes where I left off yesterday with my plans. I'm out of time, by the way, so I need to get to the hypos. Let's revert back here to where we were. We're opening way up here. This is an open auction, out of range, boring, same old stuff. Every time we've done this, we've ended up shifting. So if we look at how we've treated these big moves up, we have essentially opened in an open auction, fairly quiet. It has made an attempt at the gap zone. We have a very large gap zone. We're likely to have a very large gap zone beneath us, so there's going to be a gap zone bar that I'm going to have to add to this, to the flex levels, just like the one below it. And it generally fails to fill the gap zone, and it continues to push up to get the day's range. And we might get a gap zone low of a gap zone high of about 76 or 77, and that puts us all the way up to 2390 as far as the target for the day. If the market continues to rally, I expect it to close somewhere in the middle or lower by the end of the day. That's your hypo one. Why am I expecting it to close somewhere lower by the end of the day? Generally on gap days, that's what we've done. You look here, this was a gap day, and you can see at the end of the day these two big sell bars. This is what we've done. It's just profit taking at the end of the session. So that's hypo one. Hypo two is an open auction that tries to move up, successfully moves up, and then starts to rotate back down. Still doesn't close the gap, and then moves back to the middle. Gap remains open, except it'll likely be smaller down here. So that's hypo two there. Hypo three, if we can get lucky enough, hypo three is a push up that fails, gets us an impulsive move, and brings us back into 69 for a bounce, and then brings us into the prior day's range and brings us back into this balance zone again. That would give us the best rotations. The MC point of control for this area has shifted. It is now 62.25, and that becomes the lower target on hypo 3. I'm not holding my breath for this one. So we'll see what happens. So we'll see what the market has to deliver here. I'm over my time again, 20 minutes. I've gone over my 15-minute time slot. I'm hoping that you're gaining something from this. It's really important to me that my effort results in you just picking something up. And the goal for me, really, success is the measurement of success with this really is as simple as you staying as a trader in futures long enough to realize your potential. That's it. It's a modest goal, but it's very important because what I see is folks moving into a brokerage or a clearing account that gives them $300, $400, $500 margins for a $100,000 value, and then just blowing up and not really giving themselves a chance to really see the market and its behavior, and it's give it enough time and to practice enough to actually give themselves a chance. So they've basically wasted their time. So slow down, wait for the market to tell you you've got an edge. Define that as you wish, and then take your trades only when they happen. Keep your hands off once the trade is on. Let the market do what it's supposed to do. Okay? Good luck, and I'll catch you again soon. Take care.